point gain. So if you just saw the finishing touches there, you'd say, all right, no big deal one way or the other. Susan Lee is with us, market watchers Danielle Shay, Scott Martin. I think, Scott, it's safe to say the markets are just confused. They don't know what really happened, right?
No, they don't, Neil. It was a wild day, I'll tell you, trading it and watching it by point by point. I mean, I think you pointed out some interesting aspects, though, is coming into this meeting, the market wanted the Fed to be accommodative, meaning they wanted the rate cut, but I think they wanted the Fed to come through with maybe some more what's called dovish language, saying, yes, we're watching things, but this isn't the end of things, in the sense of they're not going to cut anymore. And that was something that the original message kind of came across as, was that the Fed was doing this maybe as another one-time accommodation as they walked back the rate hike they had in December, just back in July. So to me, the market got most of what it wanted. And just one thing I will point out, there were 3 dissenters today, my friend,
right.
But one of the dissenters was Jim Bullard from the St. Louis Fed, who wanted 50 basis points cut, not the 25. So that was one dissenter that maybe was actually more on the side of the rate cut than it may seem.
No, you're right about that. I'm glad you clarified. You know, Danielle, one of the things I saw here was how the market wrestles with a good economy and yet the push for lower interest rates, which normally happens when you have a bad economy. And it's a tug and pull. What do you make of that?
Yes, that's correct. And I mean, that's really what Powell and the Fed are dealing with right now, because they're cutting rates by a quarter point, right? And they're doing that largely because of the ongoing slowing global economic slowdown and the trade war, which can bleed into the U.S. And the problem here is that if they cut too much right now, they're not going to have that in their back pocket to fix the economy later. So while they're kind of doing a preemptive strike and the economy is still strong, they're trying to fix something that could happen in the future.
Susan, this Fed gets a lot of criticism for not relaying its thinking on things, and it confuses folks. Not only the president, it was called them boneheads as a result, but that they do confuse the markets. That's very clear. So I'm not very clear on what the Federal Reserve communicated today, that we're going to keep lowering rates as long as this trade thing is still out there and we don't have a resumption, or what?
Right. I thought the message was we are going to be here, whether it's growing the balance sheet, whether it might be cutting interest rates in the future. I thought Chairman Jay Powell was actually very transparent. In the past, his predecessors have all said we only look at inflation, we only look at full employment. He actually said in this press conference, I look at financial conditions and how it impacts the U.S. outlook. I thought that was very transparent. He's very honest. He looks at how the market reacts to these moves. And the market is telling you right now, given that we're just, 1% away from record highs, that they still expect the Fed to be accommodative. And you heard that from Goldman Sachs' Lloyd Blankfein as well. He says, don't fight the Fed. And that's something that the market should really be watching.
All right. Now, obviously, if you have debt of some sort, whether you're a company or an individual, I mean, this is great news. I mean, this means that carrying that debt, Scott, is going to get cheaper. But if you're a saver and you're trying to, plan for that rainy day, you just got rained on again. And I'm wondering how this all sorts out. What do you think?
Well, I mean, you need a raincoat. You probably need some good galoshes, to use a word, because I'll tell you, the scary thing, though, Neil, that's been happening, I've seen it with folks that we manage money for, too, is they're chasing return in the bond market now because bonds have been going up so precipitously this year. Yes, yields have been falling, but that's where they've been really seeking a lot of return and chasing that yield, if you can believe it, in stocks. So it's totally backwards and something that needs to be straightened out. And I want to point out something Susan said, which she's right. Chairman Powell, I think, is learning on the job to some degree, and he's starting to figure out maybe better ways to communicate to the markets. Back at the end of 2018, there was all this inflation talk, all these worries about inflation running wild. Obviously, that didn't pan out. All rates did was drop in the face of the Fed rate hike in December. Yeah. So he's starting to figure things out, and I think the market's liking that.
It's interesting, too, because FedEx was out today saying that, it blames a lot of its disappointing earnings and its rather sort of sour outlook on the ongoing trade war. They can make a good case for that because they're directly affected. Others, General Mills, I think, Susan Lee, were saying similar things.
Yeah.
More and more companies are going to do that, and that's what presumably the Federal Reserve was addressing, right?
Well, yes, because we heard from the Business Roundtable, which is chaired by Jamie Dimon, half of the executives say that sales will be impacted because of this ongoing trade war, but also the strong dollar as well, because in the previous quarter, all these companies were saying the strong dollar has impacted their earnings when they bring it back onshore. Same thing with Apple. That's That's what they said as well. And I think part of this monetary policy and the rate cutting cycle that we're in is because they want to get the dollar lower. And by the way, that would be helped if we actually get a U.S.-China trade deal.
We're just getting news, guys, and I'm very curious what maybe you'll make of it, Danielle, concerning Jeff Zuckerberg over at Facebook. He will be on Capitol Hill tomorrow, it looks like, to meet with lawmakers to talk about internet regulation, the kind of stuff that's been bounced around here. But it comes at a time, and you've reported this and talked about it as well, Danielle, to sort of go after the high-tech guys. And it seems to be a fair and balanced sort of targeting on the part of Republicans and Democrats about big companies, tech companies that have essentially gotten too big for their britches. Each case, like in Facebook, a little different than when they look at a Google or what have you. But how do you think this all plays out?
So for me, it's incredibly concerning when I start to see those high momentum stocks really drift lower. And over the course of the last 6 weeks, we've seen hot IPOs. We've seen those momentum stocks, particularly Facebook, Netflix, PayPal. They're trading lower in the stock market. In order to breach up into new highs with some energy, they need those stocks to go along with it. So right now, this ongoing discord with these high-tech companies, for me, it's not a good sign for the health of the NASDAQ in particular in the overall market.
All right, guys, I want to thank you all very, very much. I mistakenly called Jeff Zuckerberg, Mark Zuckerberg. Jeff was a friend in grad school. And whatever you're doing, Jeff, hi, how are you? Anyway, the Saudis say it are